Asian markets have been under pressure of late. Is this trend likely to continue? To give us an insight into that, we have with us Teng Boo, who's a managing director of iCapital Global Fund, and he's joining us live from Hong Kong. Teng Boo, thank you so very much. Good to have you back with us again. First off, the China PMI numbers. The markets are obviously reacting to that rather strongly here.
Yes, Andy, I think the behavior of the market basically reflects the fickle-mindedness of investors. Not too many months ago, investors were saying that the Chinese economy was overheating and that they wished that the Chinese economy would slow down and have a soft landing. So right now we have a soft landing, and what do we get? We get investors worried that it will go into a crash. So how on earth do you please investors that are so fickle-minded? I really don't know. Yeah, I think if you look at the situation globally, the behavior of the stock markets has been pretty unprecedented. You have markets like Sensex, Kospi, Korea, Indonesia and Thailand holding up, and including Germany, holding up very well. And then you have markets like Australia, Shanghai, and US not doing so well. So this kind of 2, 3, 4 tier type of pattern that you're seeing in the global stock markets. I've been investing in the stock markets for almost 40 years. I've never seen such a multiple level type of tiering. And I'm not sure what the message is, but I think if you look at the two main economic drivers for the world economy, that is China and the US, I think there are good reasons to believe that there will not be a double-dip recession this year or even next year. If you look at China, the soft landing, I think, is coming on along very well. And in the case of US, although economic data has been rather mixed, the housing industry in US has been weaker than what is expected. I think if you look at the overall situation, it's not surprising that you see a bit of a slowdown in the US economy in the second half. But don't forget that the unemployment situation in US has been very unprecedented. Productivity growth in US in the last, say, 3-4 quarters has been at a pace which is totally unsustainable. There are limits to productivity growth. So what that would mean is that there will come a point in time where employers in US have no choice but to start hiring, otherwise they'll lose business. So I think that point of inflection in terms of employers hiring would be coming probably in the next 1 or 2 quarters. And that would mean that the US economic recovery that we've seen in the last 3 quarters will move from the first phase, which was mainly due to inventory investment and government spending, to something which is more related to the housing recovery and job growth. Well, I think we discussed this a couple of months ago. I think my view of any markets will always be from a very long-term perspective in the sense of 5, 10, 15 years. And I think I shared with you my concerns over the macroeconomic picture of India. I think if you look at the latest inflation figures for India for May, whether it's at the consumer price or the wholesale price, you're seeing pretty worrying figures coming from there. Of course, towards the second half of this year, the inflation numbers should be a bit more muted because you're comparing with a higher base of last year. But there are a few wildcards that I can't have a finger on. I mean, how would the monsoon turn out to be? I can't answer that. I don't think anybody can answer that. So I think my concerns over the Indian economy with regards to the inflation, budget deficit and so on have not gone away. And like I said in the previous interview, I just like to buy any investments with some margin of safety. Yes, I think the reduction in the subsidies is definitely the right step in the right direction. It's just that I'm just concerned with the timing, given the fact that inflation rate is rising and at a pretty high level. Probably it might be a good time to delay the adjustment in the fuel prices. probably at a later stage. But I think fundamentally, philosophically, that has to be done. I mean, don't forget that, Manmohan Singh, he is a brilliant Prime Minister, brilliant economic strategist, but he is getting in his age. He is 70 plus, and I really don't know. I need maybe some input from you. Who would be the successor? Would it be the next Gandhi? And the next Gandhi is only about 40 years old. I'm not sure whether at that age he would have enough experience, whether he would be able to build a team that will carry all the major reforms that are required to be implemented. I think the biggest risk is that local investors and foreign investors get too complacent. I think that is always, if you look at any markets anywhere in the world, that is always the cause where the seeds of destructions are always being sowed, where investors, local and foreign, get too complacent over longer term risks. And then the day the longer term risks surface, then they panic and they run away. So I think the most important thing is to be able to make sure that valuations are not too high, and that the macroeconomic risk, whichever measure that the government is undertaking, is fully supported by the opposition and the ruling government.